Good morning, everybody. Brady here from Bright Work down in Florida. I want to just talk about a couple common things about horror stories about double taxation, and preventing that, as well as, I think, if you're interested in investing in the United States and looked at real estate, you've probably heard about the IRS holding back sale proceeds from the property that you owned or somebody owned, holding back 20 or 30% of the sale proceeds, which then becomes a big fight to get that. So these are two things that we're going to talk about. But yeah, and also we're going to talk about is how you can prevent this kind of stuff, and how you can invest passively into U.S. based projects, earn U.S. based income, and can own real estate, and you can prevent all of the horror stories. And it's not overly hard, but it can seem like quite a daunting task. But first, I should disclaim that this is not tax advice, and that you certainly should be utilizing a U.S. and Canadian tax professional, and likely legal advice as well for any of this stuff. We've done a lot of this due diligence on our own, just purely by jumping in feet first, jumping into the deep end and sorting it out. We haven't screwed ourselves. We took the time to ensure that we were working with professionals to make sure we did set it up right the first time, and we're doing the same due diligence. You may have saw that we've got a 109,000 square foot self-storage development that we're doing, where we'll be working with limited partners and investors on that deal. But and we're doing we've gone to great lengths to ensure that those people can successfully and confidently invest in these types of projects without having any of these negative issues impact them in the future. So maybe I'll just talk about just to recap that, yes, you can own U.S. real estate. You can prevent FIRPTA withholdings. You can earn USD income on investments. But again, you need to strategically and properly prevent yourself from getting screwed. So let's just talk about what those issues are. So double tax is a huge issue. So and I can tell you a little bit about how you can prevent it. Again, but you're going to want to rely on your tax accountants, U.S. based and Canadian. But so paying double tax. Okay, so that is where you would earn income in the United States, pay tax on it, and then you would, you have to declare your worldwide income on your Canadian tax return, and then you would pay tax on it again, right? So then you're paying tax on the same amount of on all of the income twice, right? Which obviously is not a great thing. So how a large reason why this happens is because people buy or invest in buy property with LLCs, or invest in or own LLCs. Okay, so as a Canadian, so this is not an American issue whatsoever. They use LLCs all the time. But if there is an LLC, this is my understanding, if there is an LLC in any form or capacity with regards to you being a Canadian, then there's going to be negative consequences. So the government doesn't recognize LLCs as, and so everything that we should be doing as a Canadian needs to be dealt with in an LP, so a U.S. based LP, limited partner company. So, and what that does is that'll allow you to, I guess it's some sort of a flow through. It's recognized as a flow through company. So where you can pay tax in the United States, and then you would actually get a tax, what is it called? Tax credit, right? On your Canadian tax return. So then you would, so you're not going to pay double tax. You're going to pay tax in the United States. That's going to give you a credit in Canada. And then you would pay the remaining tax in Canada based on however it's set up through corporations or personnel. So again, that is, if in the situation that you were, investing or had a LLC structure, then you don't get that. The CRA does not get that flow through, and it doesn't recognize it. So that is a huge thing. No LLCs, use LPs. Okay, so when we look at the our self-storage development that we've got going on down here, it was, prior to us taking the project over and doing this, it was set up in an LLC structure, right? Where and this is how it always happens down here, where the LLC actually owns the company or owns the land, is going to develop it, and that's where the investors would invest, is right into this LLC, where again that would screw us. So we've had to restructure the entire deal so that it's LPs actually own the land. A limited partner company, US-based limited partner company, actually owns the land, and so that's where our Canadian friends can invest directly into that. The American friends can also invest right into that as well. So there's no negative consequences from the American side, and there's only positive consequences from the Canadian side. So that's a huge thing that we've gone down the road to ensure that we do that. And when you invest directly into a US-based LP, you're going to create a US-based income, which requires you to file a US-based tax return, which isn't a huge deal. Again, if you want to know what to do, you have somebody to really help you do it. So you're relying on the experts. So what we've done is we're partnering with our accountants, who's really going to help the investors that work with us file their tax returns. So there's two things that we actually need to do. Is we need to set up an ETIN number. So that's, again, just if you don't know, you don't know, but we're going to streamline that process for anybody that gets involved with us through our accountants. And then you have to file a US-based tax return. Again, the accountants are going to do that. And so we're going to obviously have a large number of people that we work with, and they're going to be, so our accountants are going to do this for them. So for the first year, the first year, we're going to have to set up an ETIN number for every person, as well as file the tax return. So that first year is going to be $300, right? For, whatever income earned. And then the next year, because the ETIN number is already set up, we're going to, all the person's going to need to do is file a US based tax return. And that's only $150. So again, it's just sorting it out and really just, us doing all this homework is the idea here is really to make it as easy as possible, remove the barriers, for the people that want to work with us, but then also, for if you're an active real estate investor and you want to expand in the United States, you want to take action and then that's why we're hosting all this information in the mastermind as well. So that way we can really remove the barriers. You don't have to go through, all the trying to figure it out and pulling your hair out that we did. We're going to give you the shortcut and give you all those answers. So that's like, from a passive investment side. So you may be a real estate investor or somebody that wants to come down here and own real estate. Maybe you want to, maybe you're going to do multifamilies, or maybe you're going to do flips, or maybe you're going to do short-term rentals. And it doesn't matter, or it could also just be your second vacation home. Like maybe you're going to buy a house down here and just, that's it, just one house in Florida, for example. So, and you have to equally be due diligent with regards to how you get that set up as well. Again, because of this FIRPTA withholdings. So FIRPTA withholdings is basically the IRS holding back a big chunk of the sale proceeds, so they can, make sure that they get their tax out of you. There's ways to, if you want to have all this happen to you and have withholdings, then you should hold it in your personal name or hold it in an LLC. This is, again, not tax advice. This is just my experience, and this is what we've been advised. So yeah, if you want for to withhold a whole bunch of your money, then yeah, put it in your personal name and put it in, or put it into an LLC. If you don't want to have FIRPTA withholdings, then you can do two things. I believe you can have it in your name, but you can actually, I think this takes, I was told it takes 6 months. So 6 months prior to whenever you think you're going to sell it, then you can file some sort of documentation to the IRS to be exempt. So, I mean, there is an option, or you could set it up and hold the property in an LP company, so limited partner company in the United States. So, then FIRPTA withholdings doesn't apply to LPs. It does to LCs with regards to Canadians. So again, those are two things that are very like if I'm going to buy one property or two properties, I'm probably going to take the extra step and set up a corporation, and it costs $1,500. But it's going to save me a whole lot of hassle down the road, right? And I can claim, if it's going to be rented, then I can claim my on my US tax returns. I can get my US tax credit for the Canadian side, and then I'm not preventing double taxation. I don't have FIRPTA withholdings, and everything's great. So again, mastermind April 8th, 9th. It's going to be awesome. I mean, we're going to talk about all this stuff that we've learned, and it's really about giving the people that come the shortcut to success. There is only 6 seats left, so we're capping this at 20 people. Hard stop for sure. And all the speakers that are coming these guys are experts, and girls are experts in wholesaling, flipping thousands of flips, doing storage, huge storage development similar to what we're doing, building massive teams, short-term rentals, Airbnbs. We're really creating a tribe of Canadians and Americans that all just really want to grow and do amazing things, right? So putting yourself in a room with like-minded individuals that want to kill it is it's where it's at. So DM me if you're interested, and we can have a chat. I can see basically if this room is right for you. It's not right for everybody, so it's not if you're not if you're just interested in starting and investing in real estate, or you need to learn the basics, this is not the room for you. If you're relatively active, or you're gung ho and you got a bunch of money and you're ready to hit the road rocking, and you're going to start buying stuff and building teams and doing something, this is the room for you for sure. So anyway, hit us up. Love to hear from you. I hope those tips save you a whole pile of money and make it easier, remove barriers to invest in the United States. And if you're interested in discussing how you can get involved in some of our projects down here, we'd love to have that conversation with you and educate you along the way, and kind of get you prepared. It's something that takes time, so starting the conversation now really makes sense. All right, everybody, have a great I guess it's Wednesday, so have a great Wednesday. Take care.